during this morning's panels on the future of finance, we thought it would be very interesting to zoom on one specific use case within the finance environment, which is payments. So here we go. But before that, some facts regarding the payment industry and overall owning of digital assets. In 2024, the latest reports reported that roughly 560 million people own digital currencies, which makes up for roughly 6.8% of the world's population. That is a notable increase, right? 34% increase from the previous year, so 2023, highlighting a growing interest in the fact of owning digital assets. However, one might argue that owning digital assets doesn't mean using digital assets. And I think this highlights the need for probably a better way to process with payments, which is essentially what crypto assets were made for in the beginning, and why we're going to be zooming on how is the industry evolving, what kind of solutions are brought to market. And for that, I will welcome three founders on stage. So please welcome Axel Catlan, founder of Koulipa, who is active in the payment space for retail. Alex Noka from Validation Cloud, one of our portfolio company, who is active in the infrastructure space, and Oye from Busha, who is a Nigerian-based crypto exchange, active since a long time now. So maybe before I start formally with questions, we can have a small round of introduction so you guys can probably explain a bit more what you do on a daily basis. Axel, you want to start?
Yeah, happy to start. So Axel Catlan, I'm the founder of Koulipa. We are a issuing service for crypto wallets. So we enable crypto wallets to issue cards, MasterCard or Visa cards that can pay anywhere Visa, MasterCard are accepted. And the way we build the system is that we leave the stablecoin that gets spent on-chain as long as we can. So we settle directly from the wallet to almost the scheme, so Visa, MasterCard, and depending on the region, it can be all the way to the scheme. And that's a way for people in their day-to-day life to spend the assets that they have in these wallets.
Alex.
Great. I'm Alex Nwaka. I'm the co-founder of Validation Cloud. At Validation Cloud, we're an infrastructure platform. We fundamentally fill three sort of specific functions in the blockchain space. The first is we validate transactions on particular blockchains, and so you can think of that as processing transactions, securing networks. The second piece is we offer what's called Node API, but think of that as your internet service provider for sort of the Web 2 analogy in order to connect into and read-write on blockchains. Any application that wants to touch Web 3 needs to use a node. So that's our second product. And then we also offer a data product, which is effectively making blockchain data more seamlessly accessible to applications and their ecosystems. So that's us.
Oh, yeah.
I'm Adeoye Ojo. Is it?
I don't see.
I'm not. Yeah. Can you
Yes,
try again?
good now.
I'm co-founder of Busha. It's a centralized exchange.
Yeah, it doesn't seem like it's working.
Okay. Okay.
Yeah, now it's working. Yeah.
Now it's working. Yeah.
So yeah, my name is Adeoye Ojo, co-founder of Busha. We're a centralized crypto exchange based out of Nigeria.
Maybe you have to put it closer to your mouth, no? Sorry for the small technical break here.
No. Yeah. Okay.
Perfect.
Glad to be back. My name is Adeoye Ojo. Oye, to make it easy. I'm co-founder of Busha. We're a crypto exchange, a centralized crypto exchange out of Nigeria. And what we do basically is on-ramp, onboard users into the digital world, into the crypto world in Nigeria, getting people to be able to access digital assets. And that's what we started with. But we're expanding that beyond just traditional exchange into providing full suite services around tokenized assets, investing in tokenized assets, paying with crypto, just things that improve the quality of life of people in the markets where we operate.
All right. That being said, So the way I think we can unfold this panel is maybe to zoom out a little bit, and I'm looking at you, Axel, because you've been working at MasterCard in the past. So you've been in the traditional payment space before. So maybe you can describe for us a little bit the current state of traditional payment industry and its perception of / adoption of crypto products. Like, where do we stand now, and why is crypto on the roadmap for a lot of these companies?
Yeah, it's a very good question. I've got the feeling I mean, we've been through FTX and all of the moment where crypto was, for TradFi, a very dirty word, and that really, there were, I mean, I know, for example, at MasterCard, we were looking at it, and the whole thing just made it very, I mean, MasterCard is very much about the trust that people put in the brand. When you use your card, the merchant needs to trust the fact that they will receive the money. When you use your card, you need to know that fraud is not gonna happen, or if there's fraud, you'll be protected. So the whole the whole bad reputation that came in with crypto suddenly put a very long winter into payments. It's getting much better. MasterCard is now, and Visa are very much promoting the use of blockchain as a way to make payment more efficient. They realize that, I mean, probably they have some of the biggest volumes of cross-border transactions. When you go to a foreign country, they need to pay that merchant. So they have a huge volume, and they realize that it will bring efficiency for them and for the ecosystem. So that's definitely something that is happening. It is still, because not all regulators are very open to that. Oye is very humble, because he's one of the first Nigerian regulated centralized exchange, and he's really new. So we see that a lot of markets are just now getting ready for it. So it is in the making, but it is definitely warming up. And when you see giants from TradFi like Stripe acquiring a very pure Web3 company like Bridge, it is happening, and it's going to accelerate now that everything is aligned for payment to really happen and on-chain.
We'll surely talk about that acquisition later down the road. So if we had just a follow-up question for you, well, I mean, the main arguments for crypto adoptions, right? I mean, if we go from there, would you say it's like lower transaction fee, faster? Like, how would you define the main arguments for crypto payments to really revolutionize the crypto space? The payment space.
Yeah, and there are multiple layers to it, and I think we are just touching the first element, which is holding an asset that is not normally not easy to hold. In emerging markets where people are not allowed, it's very hard for them to have a USD account, and they want to hold a much stable account, a stable asset that's their own currency. It is a use case where a stablecoin is very much desirable on these markets. So that's for me one of the drivers. The other one is indeed when you talk about all of this remittance and cross-border transactions, easy transaction, cheap transaction across the world, with certainty of the amount that you're really sending, all of that, the trust that It's funny that a technology that was very non-trusted still a few months ago is now becoming the most trusted way of sending money across. So that the cheap and reliable transactions that are enabled by this new wave of wallets that are very much remittance or payroll related. And I think these are, for now, the main two drivers.
Got it. I mean, let's jump right into the heat, right? Can you share maybe, that's a question for all of you, specific payment use case where crypto is making a tangible impact, and maybe how your companies are addressing those? And of course, I'm turning to you, Oye, at first, because you're serving I'm not going to say millions, but maybe it's close to that, of people now in Nigeria with your solution. I would be interested to understand, what is up with this?
Yeah, I think the most exciting use case for crypto payments in our market, especially for us at Busha, is business payments. We have traditional businesses who have to pay vendors in different markets. In the past, you could access these dollars through the banks and make your payments seamlessly. But due to so many economic situations that have happened, over the past decade in Nigeria and in so many other African countries, there's a crunch on dollar liquidity, and then cost of payments is extremely high.
How much are we talking about?
So, on average, you'll be paying, because there are two sides to the cost, right? There's a SWIFT side, which is standardized, what the fees are, and then the cost you're paying to access the dollar through the bank. And when it's not available, the bank can charge you anything, you can't decide on what that is. So sometimes you can be paying as much as 10% in terms of fees.
Just for converting.
Yeah, just to be able to make that payment happen. So crypto is solving that problem. And for you to just have a bit of context on how that works is the dollar liquidity is what has brought this opportunity, in my own opinion. 2014, 2013, the trade balance in Nigeria was I think, almost $50 billion. So the central bank can provide dollars to the banks. Banks can, fulfill transaction requests from businesses seamlessly. I think in 2020, 2021, we had trade deficits of maybe less than $5 billion, which means there was no bank dollar to even provide to the banks. It's starting to improve. But even with the improvements, you still have something maybe in the region of 10. So the FX reserves of the country is depleted. Banks cannot fulfill these transactions. There was a time I could use my card, my Naira card, for payments anywhere. But that's been completely eradicated. So this is the unique case where crypto is solving that problem, where businesses are able to access stablecoin or BTC, as the case may be, and settle payments for that. So I think that's the most exciting use case that I would want to highlight. Yeah.
What about you, Alex?
We come at the whole space from a different perspective, I guess, just because, again, as an infrastructure company, we're generally supporting, applications that are payment applications, or we're supporting blockchains that happen to do a lot of, the use cases we're discussing here: cross-border payments, remittances, what have you. I would say the area that we very specifically have spent a lot of time focusing on is interoperability. So in the Web3 space generally, there's quite a large Oracle service called Chainlink. Basically provides price feeds on a variety of different blockchains. They really exist to make sort of a seamless interoperability between blockchains. You want to move different tokens to different networks, or you want to have various stable coins that you want to move that might not be interoperable. They sort of solve that. We're one of the core infrastructure providers for their interoperability protocol, and so that for us is sort of how we come at the payment space. It's one of many things, I guess, that we support, but we sort of look at it as what are the killer use cases, in crypto, and being exposed from an infrastructure perspective to those killer use cases in terms of powering that activity.
Yeah, makes a lot of sense. Which, prompted one question when we discussed that earlier is, how do you see the traditional institutions, in finance, seeing that? Are we seeing, witnessing competition, collaboration? Because, on one hand, you have liquidity providers, on the other hand, you have the crypto infrastructure, and in between, you have service providers like Axel and OIS. How do you guys witness the collaboration or the competition in this space? What has been your experience so far? Maybe Axel, you want to jump in?
It depends. It depends what role they have in the value chain. If I take our partners, which are the payment schemes, they embrace it because for them it's a way to make their own business more efficient. And I would say the rest of the payment value chain so far is a bit ignoring it because they don't really see they don't see the risk and the competition yet. It's probably going to change because I think that the growth is going to be quite exponential from now on. But yeah, it's more like ignorance. You have like Swift. We've seen these POCs of Swift trying to, exploring, but these are very slow processes. There's one team in somewhere at Swift that does a bit of a mad scientist type of thing in their mindset. So probably not something that's going to be embraced very quickly, and they see that as forward thinking. Yep. And they don't realize that it's now thinking. It should be now thinking.
And maybe to build off of that, I think there's, like anything, there's a spectrum. And I think there are some very forward-leaning sort of crypto-embracing companies. I think there are some folks that are, sticking their head in the sand. I would say like the middle 80%, in my opinion, is sort of evaluating in different ways, shape, or form. And I think speaks to Axel's point around, there's a group in some of these companies and that's working on digital assets and what that means for them in terms of payments. But what I really think is this really comes down to, one, regulatory clarity for a lot of, when you start talking about big enterprises, big institutions, they reside somewhere in a domicile that has, clear or unclear sort of regulatory treatment around these things. And so that lack of clarity in a lot of ways, I think, stymies the ability to really go aggressively, in terms of internal programs. The other thing is I view it as where's the wealth and like how are you tapping into that? What do I mean by that? Well, I think when you look at what MasterCard's done, they've sort of said, hey, we want to be at the intersection of where our customers' spending power is and where they're transacting. That's been their business forever. Now, if you look at somebody who's in a younger generation that is very much embraced crypto and holds a lot of crypto, a lot of their wealth is generated in crypto. And so it makes a lot of sense for MasterCard to say, hey, we have a pre-spend card that's tied to your crypto account. Just makes sense for them to do that. So they've done the really obvious things. I think it's there's ways in which that can be furthered around stablecoins and what they're going to do with that. But I think those are really the two things that I think govern how quickly a lot of these institutions and enterprises move.
Yep.
Yeah, I think the future is more collaborative than competitive. Yeah. And as you said, regulatory clarity is what is going to drive that. And we've seen that in Nigeria, following the license that we acquired. We've had more traditional fintechs and even banks warm up to us. Banks didn't want to touch crypto before in Nigeria. They want to open bank accounts. Are more willing to have conversations with us. We have big fintechs that Money Point, like Paystack, and all of these licensed players willing to come integrate, ask us for APIs so that they can expose these services to their own users. So I think with better regulatory clarity, there's going to be a lot of collaborative effort than competition because it's kind of inevitable. Yeah. At the end of it.
And I think for them it used to be an ROI on that innovation. The risk of being blamed by the local regulator or the uncertainty about regulation was too high compared to the upside of the potential business. Now that the regulatory risk is lowering and the business opportunities is growing, I think that's when the shift is going to happen for them to really look at it. They were a bit.
No, it makes a lot of sense. I think stablecoins have kind of. I remember you, Alex, saying it's a killer use case, and I would like us to just reflect a little bit on that because stablecoins have been around since not the very beginning, but I think it appeared roughly after the second bull run. With Tether now, worth hundreds of billions in terms of market capitalization, we're seeing the importance of stablecoin in everyday life and especially in payments. How do you guys plan on integrating that and are already doing so within your product, and how do you think where that's going to go? Because stablecoin eventually remains tied to fiat money, and I would very much like to understand how do you see payment and stablecoin evolving together. I think, you have like very factual use cases in Nigeria.
Yeah, so what stablecoins, especially USD stablecoin, has done for the market is provide an edge against local currencies. So a lot of people just watch value erode with every time Naira depreciates, and that happens across multiple countries in the continent. So in Kenya, the same thing is happening, right? but being able to convert from your fiat, local fiat into stable coins, provide you that edge, that safety net, and that's something that people are adopting. You're able to save in that, and we're also then able to provide, other services built on stablecoins, like savings, which gives you yield on that. So you're not just protecting yourself against devaluation, you're also earning some interest on that. It also helps with merchants accepting payments, and that's where we think there's a bigger opportunity. When merchants across the continent can accept stablecoin as a form of payment across border, that helps. But that also needs, a lot of on-the-ground work, because at the end of the day, we still need the TradFi integration, because after you've been paid in stablecoin, you still need to get your money out into fiat. So until we're able to build a system that everybody's happy to live on stablecoin, until we achieve that, we still need the integration with banking system. So I think better integration will help to drive adoption, because now nobody needs to be scared. Anytime you need to get out of it, you can get out of it easily. So yeah, those are the use cases that we're seeing. But cross-border payments for merchants and for protecting value, wealth, are the major use cases.
Yeah, I guess countries where hyperinflation is a thing, definitely, prove a point for stablecoins. I get that. Alex, so we extensively discussed the stablecoin thing together. From the infrastructure side, could you zoom in a little bit on how are you, as an operator of those infrastructures, enabling these use cases to really happen, so that people understand what's happening under the hood?
Yeah, so I think from an infrastructure perspective, again, where do we sit and how do I think about it? I think that the world is filled with assets. Stablecoins are another asset, right? And you have productive assets, and then you also have sort of assets that are in motion or velocity, right? We want to be operating, sort of the infrastructure on, of blockchains that have the most activity in terms of the velocity of those stablecoins and so forth. And I think one of the things that Oye-san said very, very eloquently is that, when we look at, what's happening in some of these emerging economies in terms of the velocity of payments and transactions that are made on certain stablecoins, it's really interesting. I think to take that a step further, I think back to my earlier point, this interoperability component is going to be really critical. And we see that as sort of really the big unlock, but we almost don't even look at it from a, specific stablecoin use case. We say to ourselves, okay, great, we're going to support, Busha as an example, as an infrastructure provider, and based on how much their business is growing and what the activity is that they're sort of have denominated in stablecoin, what have you, that is something that's interesting to us. So that's sort of the way we look at it, and again, much more from an interoperability lens, though, in terms of what we're solving for.
Yeah, how crucial do you think interoperability is going to be?
So I think critical, right? I think of this as, if you want to have broad-scale adoption of, stablecoins specifically in this case, but just in payments in general, it's just easier to have, different stablecoin assets that are, again, interchangeable, work seamlessly. You don't have to think about, hey, does it work on this blockchain or that blockchain? It just all works. I think it's going to be, several years before we get to a place where it's really seamless, but the work in the ground, the groundwork's already been sort of laid there. So I think it's really critical. I don't foresee, there being it's going to be very difficult to get to a really massive scale if you don't have interoperability, put it that way.
No. Yeah, that makes sense. From a broader adoption perspective, I'm now turning to you, Axel. We understand that Busha is serving a lot of B2B, the B2B market as a whole. What is the customer persona that you think your solution will serve? Because I think you have a bit more of a retail angle than others, and I very much would like to understand, who are you targeting and where do you see usage?
Yeah, I mean, we indeed, we are a B2B2C company or B2B2B company, so we serve wallets. We offer them white label solutions, but as you mentioned, most of the wallet we see going for cards are more the B2C wallets, and we see two clear trends. One is OG wallets, or the old wallets that have been here for a long time, are transitioning from a very investment trading positioning to a more broader banking type use case. So they're going from needing to list every single coin in the world, but also being able to hold USDC and hold dollars and have an experience like looks more like a current account. And that's where the car makes a lot of sense. And all of them are making that transition. We also see more specialized wallets who are more into remittance, payroll, where they almost completely hide the fact that it's stablecoin behind the scene. You see a dollar sign, there's a small USDC in the back or PYUSD in the back, but at the end of the day, they want to create an experience that is the same as online banking, and this are more targeting emerging markets where just holding USDC or transferring USDC is a value in itself. I think in Western countries we see more like the investment transitioning to banking type use case.
Spending habits, I guess.
Yeah.
I think. I mean, remittance. We're strong believers at Blockhole that this is a use case that has been long proven to be very good for crypto and where crypto has answers. But now regarding like the use of it, so it's a question for all. But I think maybe Oye, you have a more precise answer. It's like, do you feel like there's a need for education in the field, or do people already recognize the value behind it? Like, do you see a need for abstracting UX or the fact that it's crypto overall? Because this is where the products are heading towards. What's your take?
Yeah, I think there are two classes of customers, right? There are the ones that you need to educate, and then they make that decision on their own that stablecoins make sense. I should hold it. It helps me. And then there are some very risk-averse customers, and I'm talking about people in my market, right, where the first interaction with crypto has been like, oh, it's something I should be scared about. So even when you mention stablecoins, they're still worried, like, who exactly is holding this USD? You know, I don't know who Tether is. I don't know who Circle is. So you can't do all of that education. And abstracting it and just providing, because you're regulated, you can abstract it and just tell them this is USD. Provides the comfort they need, and they don't need to know what's going on. And we see that happening already with even remittance companies in the West who are trying to send money back home, leveraging on stablecoins to, you know, move the money faster to get conversion into local fiat, but customers don't know any of this is happening. So I think there are two classes where people can make that decision on their own and consciously want to hold stablecoins, and then there are a set of customers that you just have to abstract it from and just provide them what looks like a banking service because you're regulated. And that just makes it easy for them. And I think there's a lot more people in that category, so that's why we need to abstract some of this, you know, and just provide that solution to them. They don't care, they just know it works.
Yeah, and it's cheaper and it's faster.
Exactly.
Yeah, and I think we're in a very privileged position, but I mean, we are quite active in Argentina. Over there, they are transitioning from buying USD dollar notes as on the black market, like with the guy with the shotgun protecting his piles of bills, and you go there. I mean, it really feels like you're buying drugs, and it feels like that. Going to being in front of your computer, in front of your phone, and buying dollars. So for them, it is already an improvement. You don't have. Yeah. I mean. They used to be fake dollar notes, so they're coming from a very bad place. So I think when you look at Argentina, it's 46% of the population. You were mentioning 6%, but in Argentina it's 46%, because it is just creating value in itself. And even if it's a bit tricky, you have to, and it's improving, but it's already a huge improvement.
Yeah. I guess that's the key takeaway from today, right? Like, the use case, proves itself.
Yeah, and I think just to add a couple like finer notes here, I think this abstraction, sort of comment is really spot on. I do think that we're going to get to a place where people are going to go to their wealth management, their banking site, and they're going to transact the same way they feel like they've always transacted from a UX perspective, but the back end is going to deliver a faster, better, cheaper experience, right? I think that's where we're going to see really the balance of folks really on board into Web3. I think another interesting point to make on really the stablecoin side, I think we're really in early innings here for a variety of reasons. We just talked about some of the demand side factors in terms of avoiding local currency fluctuations, being able to transact really cheaply cross border and so forth. We're not even talking about what I would term loosely as like supply side here, which is okay. Well, if you look at an example that I didn't know until I looked it up. Somebody mentioned it to me recently. Stablecoins globally are responsible, or the number 16 on the list of buyers of U.S. Treasuries. More than Germany, more than South Korea. It's a pretty big buyer in a market that frankly doesn't, at times doesn't function that well. It also is another way of, from a U.S. perspective, projecting the dollar system in a way that's really interesting. So I think from that standpoint, we talked a little bit earlier about sort of like the regulatory overhang kind of loosening. I also think there was a strong case and a bipartisan one in the U.S. really pursuing stablecoin legislation. I expect that to be pursued in earnest in the next administration, and I think that's also going to give some of the regulatory clarity points we made earlier. It's going to really, I think, change the game. And I'd also think that, why do I say early innings? Well, there's the regulatory clarity, but then we haven't talked yet about, hey, who's going to launch stablecoins, either through a partnership or otherwise. I've understood that it's, MasterCard's considering launching their own stablecoin. I'm going to assume many other payment networks are going to want to do the same thing. And so I think we'll see a Cambrian explosion once we have regulatory clarity of a lot of different larger institutions that say, hey, we're going to launch our own stablecoin, which will be, I think, a really fascinating experience for everybody.
And I think that's one of the key drivers of stablecoins. They were born in a world which we might already have forgotten, where interest rates were negative, and now just holding dollars as and issuing and minting stablecoin is a business in itself. That's how Tether makes their money, and huge amount of money. So I think that the business of being a stablecoin issuer has become a really good business.
Yeah, I've recently read a fun fact on the fact that Tether, so the emitter of USDT, makes more money than BlackRock annually, with 10 times less employees.
Yeah, and I think what's interesting is that profit is other people's opportunity, right?
Definitely.
When you see something that's that profitable, I would expect others to come into that market, obviously, and so we'll see what plays out as it relates to that. I think the regulatory component will, really open the floodgates.
So I want to address the elephant in the room, of course. Stripe's very recent acquisition of Bridge for $1 billion. I mean, it's a signal about the direction institutions are probably headed towards in terms of financial services and crypto integrations. What is your take? Like, why do you think that happened now, and how? I mean, do you think we'll see more and more of that in the long run?
Oh, he had a big sigh, so I think he has a hot take.
No, it's just that I think a lot of players are starting to realize that crypto payments is inevitable. If you're a payment company, if you're a remittance company, it's not something you can ignore. So you're either going to build your own, or maybe just go acquire someone who's already doing it. And I think that's why Stripe made that decision to do that. So I think we're just going to see a lot more of that type from established players, either setting up departments of theirs to chase that opportunity, or finding opportunities that they will just, throw money at, acquire and bring on board. But yeah, it's inevitable.
I also think that the modality here is always interesting. Meaning, if you're a business, you can either build, buy, partner, and then to a lesser extent invest. Stripe made a very conscious decision here to buy. If you're buying, we see this as a long-term strategic asset, and we need to own it. And so, again, I don't know anything like beyond what's publicly sort of available on the deal, but I think it's Stripe's acknowledgement that as a payments company, we need to have this capability. We need to have it now versus waiting, for more clarity, frankly, on the regulatory front, which is, I think a calculated risk.
Yep.
But I think that if you ask me why did they sort of do the deal now or announce it now, I think, again, I think it has a little bit to do with their sense of where the U.S. elections were going to shake out and where they had clarity on the regulatory front.
Yeah, I mean, the why now, we are in discussion with Stripe regularly and with their crypto
Do you have a big news to tell us, or?
No. Not yet. No, but so I mean, when I started Kulipa, which was about 18 months ago, I remember that discussion with the head of crypto at Stripe. He was telling me, we can talk, but there's nothing I can do. My compliance, I've got products lined up. I'm just completely banned from shipping anything because of the regulations that are in place. And I think now is just the result of what we just talked about. Clarity, the business is coming, and I think, I mean, one of the good things about Stripe is that they have these two brothers, like visionary brothers on the top, and these guys know what they're doing, and that's why they strike faster than competitors. And it's just the beginning, I agree.
And these are also very profitable businesses, right? I mean, I think that's the thing we're kind of skipping over. It's great that it's better, faster, cheaper, all these other things, but like these stablecoin issuers make a ton of money.
Yep.
And so I think Stripe also, the amount, right? I think shocked a lot of people in terms of you see $1 billion acquisition, you're like, that's sizable. And I don't know where Bridge was in terms of like revenue, but
10 million.
10 million. So a very, very rich multiple. So again, I think that just shows, how attractive I think they view that business.
In the long run, yeah.
And I think again, it's a smart move by them, depending on how it plays out in terms of how they execute.